Hi guys, welcome back. So today I'll be covering another company. This company is based in the manufacturing space, and again a proxy to the entire manufacturing theme that we're playing. So today the company that I'll be doing is Anup Engineering. So I'll just directly start with the presentation, and as you know, right, like the entire analysis will be based on business model, the outlook, the capex, and of course the Q4FY23 result and the financials, right? So I'll just share my presentation. Okay. Yeah. So today the company will be Anup Engineering. So let's first understand the business model, right? Like what exactly does Anup Engineering do? So Anup Engineering does heat exchangers, all these big vessels. Can you see columns, reactors, etc. Now I won't go in detail into what column does, what is the function of a reactor and vessel, because if you see the revenue breakup, right, the majority of the revenue comes from heat exchanger. That is like around 75% of the revenue comes from heat exchangers. Now, what does this heat exchanger do, right? Let us try to understand what this heat exchanger does, right? So can you see this? This is the inside diagram of an heat exchanger. Basically, a heat exchanger is will help a liquid heat the fluid, right, without coming into contact. So let's say if there are two fluids, they will get heated without coming into contact with each other. Now, what does that mean? I won't go again, like I told you, I won't go into complete detail, explaining the function from start to end, but try to give you a basic understanding of what and how a heat exchanger functions. Like I won't try to explain you like, oh, there are four inlet, four outlet at all. Just let us try to understand what does this mean by telling, there are two kinds of fluid, and both a fluid will get heated without each other coming into contact. Can you see it? This is the outside part. See, when you see this heat exchanger, can you see the outside part is a shell? It is also like, the shape is also like a shell. So the outside part is called a shell. Now, if I take a cross section of this heat exchanger, the inside of the shell, you'll have these tubes, multiple tubes you're gonna have. So what will happen is, let's say I need a liquid to be heated. Let's say, like for example, I'll take a crude oil. I want my crude oil to be heated. So what will happen? The crude oil will enter through one inlet and they will pass through these tubes. Can you see these tubes over here? They will pass through these tubes. And let's say the water, you have to heat this liquid, right? You need a heating liquid. Those heating liquid will be around the tube, that is inside the shell, right? Around this area, the heating liquid will be there. So what will happen when the cold crude oil will pass through this, and there is already a heating liquid here around it? This crude oil will get heated and it will come out. Now, of course, there are different kinds of heating also, like, either it can be straight, or the fluid will go in a cross flow system and things like that. But just understand the basic thing. It's basically like you'll have a liquid which has to be heated, but it has to be heated without coming into contact with another liquid. So example, like I told you, crude oil jayega yahan se, and the outside part will be covered with hot water, and because of this hot water, what will happen? A conduction process will happen. This hot water will heat the other whatever liquid will be inside. So this is a function of a heat exchanger. Now let us see the revenue breakup. If you see the revenue breakup, right, उनका majority आ रहा है अभी domestic से. That is 81% is coming from domestic, and 19%, only 19% is coming from export. And here are the red flags. As you can see, these are the countries that they are there in, and other than India, if you see, these are the countries that they export to. Like I told you, the revenue breakup based on products, like a heat exchanger is 74%, vessel is 11, and tower and reactors are 7%. So I don't want to go into detail because it's hardly any. You're seeing, right, the majority of the revenue is coming from heat exchanger, and they're known. Like if you see Anup Engineering, they're known for for selling heat exchangers. If you see customer base also, like where are these heat exchangers used? These heat exchangers are used mainly in your petrol industry, oil refinery, chemical industries, right? So that is why even when you see the customer base also, can you see like the majority of the industries that are there are from the petrochemical industry only, whether you talk about Adani, Reliance, Indian Oil, etc. And of course, there are heavy engineering industries also, such as L&T and Toyo, right? Yeah. So first, that now that we've understood the entire business model, and revenue breakup kaisa hai, kahan se revenue aa raha hai, and what is the product portfolio also, let us understand what this company has been up to and what they're planning in the future, right? The first thing is right now there is a huge demand in petrochemical and chemical industry. Now, why is that so? Because you see the entire manufacturing space as we talk right now is seeing a boom because the government has been spending a lot, right? They've been having several projects such as Atmanirbhar, PLI scheme, we talk about it. Even when you talk about roads and railways, when you talk about railways also, government has sanctioned so much money to even get that 400 Vande Bharat Express and things like that. So as a result, what has happened because of this petrochemical and chemical industry also is seeing a boom here in this entire manufacturing space. And here the government has put us, I wouldn't use the word sanction, but has told that if you buy products that are based out of India from a domestic supplier, you get a kind of a concession, right? Like for example, these heat exchangers are Indian made. So let's say if these companies that are there, petrochemical industries, they are supposed to support the industries. They get a kind of concession if they do buy products from these domestic players such as Anup Engineering. So that is one thing. The whole thing is boosting their sales. That is one thing. And the second, of course, the whole petrochemical and chemical industry also, as we talk about, is seeing a boom, right? Why I'm focusing so much in this petrochemical oil refinery is one thing. If you see their customer base, again here also the majority of the revenue is coming from oil refinery and the petrochemical space only, right? This is where they catering to. The majority of the customer is there, and only 11% is coming from chemical industries, right? So I would say 70% from petrochemical and the oil refinery, and 11% from the chemical industry, and the other rest is the other sector, right? So right now, as you can see, like what is the outlook here? The company, as you see, is very very confident to grow by 25 to 30% CAGR in the next 3 years while maintaining an EBIT of 22%. Now, how are they going to do so? What is the plan for this company to grow by 25 to 30% CAGR? So one of their plan is they want to increase their export book to 40%. Currently their export book is 19%. As we talk today, as of March 2023, it was 19%, and in the next 3 years they want to take it to 40%. It is also remarkable if you see. I think a year back or 2 years back, their export book was around 12 to 13%, and now it is 19%. Not just that, if you see, even in terms of order book from the revenue that is coming from the export also, in 2020 the revenue that was coming from the export was 20 crores, and right now it is 78 crores. So of course you can see, right, the export book is considerably increasing, and it is good because export products, when you export a product from here Indian based, you're going to have higher margin because यहाँ पे आपका raw material cost is less, manufacturing cost is less, your labor costs are less. So of course your margins will be higher when you sell it to your export things. So that's one thing. The next is the order book. As we talk about, even the order book, if you see the order book in March 2023 is according to March 2023, the order book is of 537 crores. Same time last year, that is in March 2022, the order book was 400 crores last year. So even there also you're seeing a increase. Now this order book, as we speak of 537 crores, it is not going to get executed all of it in 1 year, right? It will get executed slowly, probably in a year or two. Majority will be in this 2024 year, and then after that in 2025 and 2026. So what is the problem here is actually, earlier if you see this again, you're talking about such a huge industry, right? You're talking about heat exchanges and all. You can just see how big the entire equipment is. So it's going to take and the catering again to the petrochemical industry and oil industries, and majority of these sectors are basically government owned. So obviously there will be a little bit of payment problem and everything, and not only payment problem in one way, the other one is also like your order book. Just because you have an order book, it doesn't necessarily mean the order will get converted also, right? Like there might be sometimes the order also can get cancelled too. So what happened was, earlier, because of all these problems, the QOQ may, you wouldn't see that stability in the company. Like when you talk about a consumer based business, you can see a growth even in quarter on quarter, right? Keeping the seasonality aside, there is a stability that comes with the whole consumption based business. But here it is not like that. Ek quarter acha karega, ek quarter bura karega. So this used to happen earlier, but right now the company is very focused on doing, improving quarter on quarter also. And if you go back and see the last 3 quarters, right, after the June incident that happened, the last 3 quarters from after the June, like they've done phenomenally well. They have improved, they've kept up their word, and they're improving even quarter on quarter also. So That's that. Now let us see the other thing is how will the how will the capex thing be? So first thing that I told you is one, the outlook. When we spoke about outlook, there is this aim to grow 22 to 25% CAGR, right, in the next 3 years. So how will the 22 to 25% CAGR come? One is your export book will increase from 19 to 40%. That is one thing. The second thing, how your capex will how the from where will this additional revenue come is also because they've done a capex. So already they had until 2019 they had one plant, and that is in Ahmedabad, right? That company has a manufacturing facility in Ahmedabad, and they were manufacturing equipments like I told you that heat exchanger ka size used to range from 20 megaton to 450 megaton, right? Like they had different product ranges. Matlab heat exchanger hi hai, but different sizes ka heat exchanger, right? That used to be there. Now, of course, this was not enough for them. As a result, what happened? They started another construction at the capex at another plant. So this Ahmedabad ka plant jo hai, that is the other facility, 40 kilometers away from that, they started this plant called Kheda plant, right? This Kheda plant, it was a 3-year plan. They started this in 2019, and it was a 3-year plan that was supposed to, the capex was supposed to happen in a matter of 3 years. But of course, yeah. But of course, right, because of COVID and everything, it got delayed. And since it was a 3-year phase plan, they had dedicated, I think, sorry, not dedicated, they had allocated 150 crores. They had allocated 150 crores of money for this entire capex, and it was a 3-year phase capex. So 60 crores, 25 crores, and again 75 crores, in that range they wanted to do the capex every year. Itna amount ja raha tha. And by 2023, this capex is right now completed. Like as we talk right now, the capex is completed, and it is there is a trial production happening there in that Keda plant. Going forward, by third quarter, that is Q3 FY24 or max to max, the commercial production will start in August, but of course it will show up in the books by Q3 or Q4 of FY24. Right. So this is one thing. And from here also, like, see, when you're talking about these kind of plants, when you're talking about manufacturing plants, not everything is RSCL Tech, right? Not everybody is going to have a capacity utilization of 90% in year one. We are not every company is RSCL Tech. So these companies, most of the time, what happens is they can't reach that 100% capacity utilization in year one because, of course, right, you're just starting the plant. There will be so many things that goes on around the plant, right? So the first year that they're going to be doing once this capex once this plant starts commencing production, the first year of the capex they will be doing 60 crores of revenue. So from this Keda plant alone, in the first year they will get 60 crores of revenue, and starting in the second year they will get 160 crores of revenue from this Keda plant. So this is the utilization will increase on a year on year basis, like from first year to second year and so on. So combining all these two things, all the two things, like one is the export book आपका increase हो रहा है from 19 to 40% in the next 3 years. That is the plan. And the second is also the capex that they've done is going to be fruitful here because of two things. They're very confident, it will add to the top line, and you're going to get a 25 to 30% CHR in the next 3 years. And again, like I told you, the company is also confident about maintaining an EBITDA of how do I tell you, EBITDA of 22%, right? So let's now go and see the result, right? Like how this is the entire business model, the capex and management ka outlook kya hai. Let us see how the company has done, right? Like the Q4 FY23. Let's see if the numbers match, right? Yeah, this is consolidated. So if you see here, the revenue has increased both on a year-on-year basis as well as quarter-on-quarter basis. If you see on a year-on-year basis, it has increased by 41.2%, and QOQ ka basis, it has increased by 26%, right? राइट एंड अगर आप देखते हो अदर इनकम जो है वो थोड़ा सा बड़ा है. Like if you can you see here, like when you talk about, again, right, when I check my income statement, I need majority of my income coming from revenue from operation and not from other income. Like let's say for example, like Anup Engineering, if you're selling, your main business model is heat exchanger, I want you to be doing money by selling heat exchangers, not by selling some leftover plant and property or equipment or any of the other things. So यहाँ पे if you see, the other income has a little bit, I wouldn't say a lot, but having said that, 0.16 से यहाँ पे 4 crores हुआ है, right? Like the other income there has been a slight increase. Even on year, if you see it from 2 crores to 4 crore. Yeah. So why is this? There is this other income increase hua hai is the reason. Again, it's not a big on a year it has decreased. Sorry, but on a quarter on quarter basis it has increased from 0.16 to 0.4 crores. Now, why is this? Because when they do this heat exchanges, right? Every technology for this heat exchanger is different, right? Like there will be some heat exchangers that require a different technology because of the industry that they cater to. Like for example, agar heat exchanger में कुछ crude oil जा रहा है, you know that crude oil is, has a different boiling point, melting point. So the technology used for that will be different. Let's say in the heat exchanger, if you're putting merely just water or some aqueous solution mixed with some polymer, again the property is different. So the way that heat exchanger work will be different. So Hareka, although the function of the heat exchanger is same, the process to make that heat exchanger is different. So what happened was for certain heat exchangers they had to borrow a technology. So a company hai, a Netherlands ka एक company hai. One second. Let me just show this to you all. So Netherlands का एक company है that is called Lumos Heat Transfer. So they had borrowed the license from this company for some of their heat exchangers. So in every heat exchanger that they adopt this technology, they have to give a certain percentage of sales, or that is a certain percentage of royalty जो करते हैं, royalty उनको देना पड़ेगा, right? That is a certain percentage of sales देना पड़ेगा. Let's say if they sell this, maybe X percentage or 6 to 7%, God knows how much it is, they have to give that to Lumos Heat Transfer for every sale that they make. Now what happened, the last year का order book जो था, right, from March 2022 to March 2023, the portion of this licensed technology जो है, the number of heat exchangers that they sold in borrowing this Lumos Heat Transfer ka license was higher. As a result, because of that, the other income and the expenses also, other expenses also has increased slightly. Right, it's as a result of that the expenses has increased a bit slightly. Now going forward, jo unka 537 crore ka order book hai, right, that is coming from from this year March 2023 to 2024, jo 537 crore ka order book hai. In that I mean relatively compared to last year it is way less. Again, they don't give a breakdown as to like how much percentage it is, but yes, it is significantly lower, and that is why the company is also confident of maintaining an EBITDA margin of 22%. That's another reason that I wanted to highlight here. Yeah. So yeah, after that, if you see here also, एक PAT gata hai on a year-on-year basis, you can see the PAT has fallen by 40%, but it has been increased as well as 40% quarter-on-quarter. Now, the reason for PAT is last year in March 2022, they paid, the year before that, they had paid a higher tax, and because of that, they got it, the tax was written back to them. So because of that, the profit looks huge here, and as a result, यहाँ पे थोड़ा profit कम दिखाई दे रहा है. It's all because of the tax का thing. But having said that, if you remove this, it's still a profitable business here. The PAT has grown year on year. I mean, just check this. अगर आप PBT देखते हो, profit before tax भी बढ़ा है from 61 crores to 69 crores, right? So the next thing is, अगर आप देखते हो कि like balance sheet में, if I go into and see, there is no asset liability mismatch if I have to check also, because yeah, because if I see the current ratio, like if I have to check my asset liability mismatch, if I see like the current assets divided by current liabilities, even in there also there is 2.3, like the asset, how do I tell you, the the quick ratio is there, right? Like there is no asset liability mismatch. आप देख सकते हो. The equity also, the book value also has increased. If you see here, I think the increase in book value from 393 to 437 crores. So there is a 11% increase in book value यहाँ पे, right? So that is also there. The next thing, I'll just directly go to the cash flows if I and see. अगर आप देखते हो यहाँ पे cash flows भी, right, profit जो होता है before taxation, again the same thing, right? Like if I remove the tax and everything, it has increased from 61 to 69 crores. That is one thing, right? और आप देखते हो working capital में क्या क्या changes हो रहे हैं. Then of course all this depreciation, amortization cost, if you take, also it has increased. It is up at 83 crores. यहाँ ये 83 crores, let us see where it has gone, right? Where is this? Let us see where in the business this 83 crores has gone. So अगर आप देखते हो पहले है कि like inventories तो क्या बड़ा है, right? Like inventories has gone from 23 last year same time it was 23 crores to 36 crores. Now see, these kind of businesses, as the growth rate goes up, now if they come and tell कल अगर 25% से बोल रहा है कि like 30-35% करेगा, then the inventory also will go as how do I tell you, the inventory also will grow at that rate. Because see, when you talk about these industries, right, the project length of these industries will be huge. These are not like a footwear industries, when you talk about Metro or yeah Relaxo, yeah Khadim's or Liberty, where you're gonna pay the cash first and then the customer the customer has to pay the cash first and then you get the product. That is not gonna happen here in these kind of industry. Why? Because these industries, first of all, the reason is they have a long gestation period, or the project period is long, 9 to 12 months. ये क्यों होता है कि because this is a sandwich business model. सभी देखो, auto ancillary, manufacturing businesses, all of them are sandwich business models. मतलब क्या होता है? Now see, you're seeing this huge like huge has sorry the huge product, right? Now they need raw materials for this. ये raw material be, when they have to buy it, they have to pay the money upfront first, right? And then they get the raw material. जब ये sale करता है, when it goes to the end user also, they will have a contract. They're not going to get the money like boom, like one shot, right? There will be a contract basis, like पहले इनको इतना money आएगा, then second month, like whatever the contract basis is. As a result, what happens is always this cash crunch, right? That is one thing. That's why you see in these kind of industries, the receivable and payable will always be higher. That's one thing, right? And inventories क्यों बढ़ता है? Like I told you, इनका जो एक equipment है, can you see this one, like 140 megatons and all? You just saw from the picture, right, how huge the equipment is. And you're talking about going into an oil refining industries and all of that. Again, very hectic industries. So these kind of industries में क्या होता है कि like it is you can't produce these huge equipment in 3 to 6 months. It is just impossible, right? And but when the customer places the order for a heat exchanger, they will place it like what, 3 months before, possibly maybe 4 months before. But the amount that is required, the time that is required to make this product takes more than that, which means what, they always have to keep some sort of inventories or like something as a backup, right, to be able to sell this product. Because of this, as your order book goes up, आपका inventory भी बढ़ेगा, right? That is why, so it is a good indication only. और आप देखोगे कि like increase or decrease in trade receivables, यहाँ पे भी देखोगे कि like last year, 16 point, this is in crores, right? Yeah. Okay, lakh 16.54 crores नहीं आ रहा था, which means what, जो भी सेल कर रहा था, whatever the sales that you're doing, from the customer side there was a payment का issue 16.5. Here if you see, this has increased to 23.58. Again, it is not a big, like क्या बोलते हैं, like a big amount, but also this also indicates that like I told you here also, ये sandwich business model है. यहाँ पे थोड़ा receivables, as your order book grows, आपका receivable और payable भी घटेगा. Although the ideal situation would be that your receivable comes down, that you keep getting money from your customer first hand, and payable badega, no problem. But here also, can you see here 20, because that the order book is increasing, again because of that your receivable also will increase, right? Because like I told you, your customer will have a, आपका जो payment structure होगा, there will be an agreement, because of that 23.58. Then you see here the biggest other expense, right? Let's see the payables. Ah, yeah, the payables also has increased. Can you see here, 16 to 22 crores? A payable increasing also could mean that you might tell that you're not paying your suppliers on time, but it could also mean that the relationship that you have with your supplier could also be improved, right? Because you're buying so much, like as your order book increases, the amount of inventory that you get also will be increased, right? And then because of that, maybe the relationship, because you're buying things first hand from them, your relationship with the supplier also could have been better. And your supplier is giving you a bit of grant, like okay, take the product, and then maybe give it again. There also payment could have come and be like okay, give it a bit later. But having said that, remember this, with any kind of sandwich business model, when you talk about it, auto ancillary, these manufacturing space business model, as your order book increases, your inventory, receivable and payable also will increase will increase. So unless until it is not a massive change, like you're seeing 2x the change, which means of course you're not paying your supplier, right? Then it becomes a problem. But these kind of minor changes, 16 crores to 22 crore ho raha hai, it's not a big deal, right? After all of this, you can see here that um yeah, After all of this, you can see that cash flow from investing activity, cash flow from operating, आपका working capital का changes, maybe it is positive, right? Like it has become, it is positive. The next thing I would like to highlight here is, yeah, see here also one more thing I would like to highlight here is जो working capital changes यहाँ पे बढ़ गए. How do I tell you? After all the working capital, net flow from operating activities थोड़ा घटा है, right? Like if you see here, it was 74 crores. Here it was 30 crores. And like I told you here also, again reiterating the point, जब आपका order book बढ़ेगा, आपका inventories बढ़ेगा, so you have to keep a lot of cash there. And because of all this, आपका working capital की वजह से आपका net cash flow जो होता है operating activities का वो बढ़ता है. That is the reason. Then we have cash flow from investing activities. यहाँ आप देख सकते हैं majority of the money that is coming has gone here. Like of course, यहाँ पे after all the working capital changes, it is 30 crores. So of course, the other 30 crores must be fueled by debt. As you can see, 74 crores, and that is why the net cash flow used in investing activities has become after the cash flow. Operating activities का जो पैसा है after investing it has become negative here, right? अगर आप देखते हो, it has been 74 crores. Remember, I told you वो केदा plant है. इसमें तो I told you, right? They were doing a 3-phase, like a capex was been done like in 3 phase. Like पहला जो capex था, I think in 2019 when they started, they had told 150 crore capex, and they did 65 crore capex back in 2019 and 2020, and in 2022 they had done 75 crore ka capex tha. So again, this is absolutely right. 74.91, 75 crores approx, right? So the majority of the money that you can see, whatever is left over, is again going to investing activities. I like business model as such because it clearly is telling you जो भी हमारा पैसा आ रहा है, we are investing it in other avenues of growth. That is, increasing the capex, in doing debottlenecking or any of that sort, and increasing the operational efficiency of the company. So you can see that is where the entire money is going. As you can see, जो भी cash flow from operation में आ रहा है, either it is going to working capital changes to fund your working capital, and the other is going into the net cash flow. That is आपका plant, property and equipment वहाँ पे जा रहा है, right? Dividends, if you see, yeah, dividends is 7.81 crore. Again, last time it was 6.79 crore. इसी पैसे से 7.81 crore they have given. Again, it's okay, not a big deal also. So yeah, again, the company is not just, there is a healthy balance sheet. There is no asset liability mismatch, right? Inventories, receivables, payables, also not a huge difference that you see compared to last year. It is a, how do I tell you, operating activities, cash flow from operations is positive. And again, the majority of that is going to working capital changes and plant, property and equipment. Now, here's the thing. One second, let me stop presenting. So here's the thing, there's absolutely nothing wrong with this company, but having said that, the only risk that comes here is the petrochemical industries and chemical industries. Can you see, they are heavily dependent on the 75% of the revenue is coming from oil refinery. So if any demand katta hai, because in these industries, these people will face a problem, right? The only inherent risk is this. And the second inherent risk would be, of course, the order book gets cancelled, because you never know tomorrow what can happen. The order book will get cancelled. The other third thing also I would like to highlight here is these kind of industries, when you talk about manufacturing, they're not like consumption based industries at the end of the day. You will be invested here, like maybe this quarter is well, the order book is going on well. Maybe the next quarter, they will not be able to execute the order book. You never know what can happen with these kind of industries, right? So as a result, these are the kind of stocks where you have to be very quick in decision making. You can't be like, you just can't be like, okay, let me wait for another quarter and see what will happen. That can't happen. That is, if you do that here, there is a possibility you will lose a huge chunk of your capital that you would have invested here. So if you are invested in these kind of companies, please remember that these are the kind of companies. Be careful with your allocation. And the second would be like your tracking has to always be on toe. You should be on your toe when you track these companies, because like I told you, a quarter idhar udhar ho sakta hai, and the entire, anything can happen. Although yes, the company is confident of growing 25 to 30% CAGR, and they have laid out the plan also effectively. But having said that, tracking not just this company, when I talk about any company, make sure you track these companies, right? That is required. So having said that, that's it for Anup Engineering. I hope it was good. Yeah. So anyway, see you next time. Bye bye.